Now, let's be honest, gold had a pretty sucky year last year. It actually traded for 7 consecutive months down. Now, that's actually never happened since gold's been freely floated. Now, given that gold got pretty close to scraping 1630 or 1,630 US dollars per ounce, it's now rallied back up to nearly $1,900 per ounce at the time of having this conversation. Now, the problem is when gold tanked last year, so did miners. Now, what I want to know is, were gold miners going cheap back then when the gold price was falling? And now that the gold price is rising, are suddenly gold miners going to become too expensive?
Well, that's an amazing question. And I'll try and deal with all of it, perhaps in sequence. The first thing you said was that from investors' point of view, gold underperformed last year. I think gold did exactly what it was intended to do. In US dollar terms, over the course of the year, it lost 2% of its value. Compared, as an example, to a collection of world-beating tech companies that lost 50 or 60% of their value, or the S&P 500, which lost 16 or 17% of its value, or the U.S. 30-year Treasury, which on a capitalized basis lost 30% of its value. If you own gold, Shay, the way that you and I have talked about in various interviews for the last 5 years, which is to say, as portfolio insurance, I would suggest that gold did a fine job indeed. I would even argue that for people like myself who are looking to increase both their wealth and insurance, that gold was more attractive to me at $1,700 than it is at $1,900, for the simple reason that it was then $200 cheaper, and I'd like to buy more. I realize that many people don't have the same sort of emotional or financial grounding in gold than I do. But I always like it when asset classes that I'm desirous of owning more of are cheap. I don't think that gold is expensive at $1,900. I don't think that gold stocks were expensive at $1,700. And I don't think they're expensive at $1,900. I would argue, as an example, that gold stocks, measured by the metric that I like to use, which is to say the net present value of cash flows on existing reserves and resources relative to the enterprise value, are as cheap as I have seen them in a 45-year career in the gold stock. Remember, in the gold stock market. Remember that as the gold price goes up, the at least pro forma free cash flow of the gold producers goes up. So although the gold shares have rallied mightily in the last 2 or 3 months, the net future values of free cash flows have increased with the gold price too. So with regards to all of the questions, I suspect that gold's performance didn't disappoint me. It might have disappointed people who are in gold for reasons, well, for speculative reasons. I mean, I realize there's a whole bunch of people there who hear the gold narrative and have visions of $10,000 to $12,000 in their head and are disappointed that it hasn't happened over a long weekend. But those people can't be helped, irrespective of which investment category they choose to pollute. They can't be helped. For people who have an orientation towards gold for what it is good for, which is to say insurance during very, very, very hard times, or for people who own gold stocks as a way to enjoy increasing free cash flows around the gold price, both of which are attractive. I'm beginning to think, Shay, that we will see a circumstance in 2023 that's similar to the circumstance that we saw in 2020, which is to say a gold stock market that is beginning to be driven by the beginnings of merger and acquisition activities too. Call that icing on the cake, if you will. But we're seeing real increasing rumblings around amalgamation.
Actually, Rick, you've just reminded me of something I read this morning with that answer that you've given. And it was a comment from let me just quickly flick to the webpage here, the CEO of Barrick Gold. Now, there was an article written in the news this morning, and he's basically talking about how the mining sector is facing one of its most challenging conditions it's ever seen. Now, the reason why I'm putting this question to you now is this isn't your first rodeo. You've seen challenging market conditions in your vast experience. I don't have the CEO's quote exactly on hand, but tell me, do you honestly do you agree with the premise that yes, the mining sector is facing its most challenging conditions it's ever seen?
It depends on how you describe challenging. From Bristow's viewpoint, and by the way, I'm a huge Mark Bristow fan. I've known him really since his start, at least once he came out of academia, his corporate start in South Africa. Understand that Mark has to replace 5.5 million ounces of production every year. That's a mighty challenge. The industry, I guess, has several challenges. The first is that the industry has underinvested in every aspect. It's underinvested in exploration. It's underinvested in development. It's underinvested in sustaining capital costs. And all those chickens are coming home to roost. If in a capital-intensive business, if you don't apply capital, you don't have a business. So the industry has to face that. Bristow has, in fact, invested. Bristow has a larger challenge than most because he's been more successful than most over the last 30 years. Most people who've been involved in the last 30 years don't have production to replace because they didn't manage to generate any production over 30 years, where Bristow managed to generate a lot. The industry has other challenges too, Shay, that you and I have talked about. And that is the fact that the junior part of the industry, if you look at the length and breadth of it, is insolvent. If you have 1,500 listed juniors, we've talked about this before, probably only 200 are viable. The truth is that if you put the whole junior sector together around the world, every junior mining company, you called it Junior Explorco, you merged the whole disgusting lot of them, that business would lose $2 billion in a good year and $6 billion in a bad year. So what is the junior industry worth? Is it worth 6 times losses? Is it worth 12 times losses? In a bull market, is it worth 15 times losses? What's the appropriate price-loss ratio? Now, the way that an individual investor looks at that, of course, is to understand that 10% of the issuers in the sector generate so much performance, such insane performance, that they add legitimacy and occasionally luster to a sector that costs the investment community between $2 and $6 billion a year. The point of all of that is that for 3 decades, some of the underinvestment in gold and silver lies at the fault of the investors who misapply between $2 and $6 billion a year in the pursuit of insane juniors, the sort of amalgamated aardvarks, these nothing, nowhere penny dreadfuls that spend 60% of capital raised on general administrative expenditures. Bristow has a genius for going where other people don't and doing what other people don't. Bristow is willing to go to countries that most people can't pronounce. When he gets there, he doesn't fly white people 9,000 miles to operate the mines. He uses locals who would like to be there and are happy to have the jobs. When mergers and acquisitions are out of favor, he buys things. When they're in favor and the prices are expensive, he goes on strike. If more of the industry was like Bristow, the industry would be a much better place to invest.